Hi everyone, a very good afternoon. You're watching the newsroom on ET now with me, Mubina Kapasi. We're seeing a nice uptick come by for the equity markets with 1.3% of gains, and we're just staying at an 11,890 mark, not budged really from there. So it's real strength being witnessed on the Lal Street. Let's take you through the big movers and shakers today in trade and what's really responsible for keeping the market so rock steady with these gains is the IT pack, primarily led by TCS, whose numbers definitely seem to have impressed the street to a very large extent. And then, of course, you had that 16,000 crore rupee buyback. Brokerage is definitely very, very bullish on TCS, giving it a thumbs up. And not just that, it's not TCS alone that's rallying, but it's taking along with it Wipro, Techem, HCL Tech. And from the broader market, stocks like an Mphasis, even a Just Dial, an L&T Infotech, Mindtree, they're all gaining between 12 and 8% odd. So technology all the way. In fact, the BSE IT Index is gaining a mammoth 5%. Moving on, we have Q2 updates coming in from Bandhan Bank. Once again, it seems to be quite positive. The street's taking it in quite a positive manner. Bandhan Bank has reported a growth in the loans and advance book from the corresponding quarter and from the previous quarter. The total deposits as well with Bandhan Bank have surged 34% compared to the corresponding quarter and 9% compared to the previous quarter. The CASA ratio as well has strengthened. Kerala too buzzing in trade, almost 4 to 5% higher. We did have, of course, remember that piece with respect to the worst perhaps being over when it comes to generic pricing, according to Zydus Kerala. But yeah, there's that approval as well that has come in. The stock price is buzzing today in trade. Let's also take a look at Apollo Hospitals, again from the pharma space. Or rather the healthcare space, to put it in a better fashion. We had a brokerage recommendation as well that came in this morning on Apollo Hospitals, and we are seeing some momentum over there. The stock, in fact, of Apollo Hospitals is at a record high. And then Repco Home Finance, look at the rally being seen in that stock. Not sure if there's any news trigger as such, but really massive momentum being witnessed in Repco Home Finance. The last time I checked, this was actually 10 to 12% higher. There's, of course, that circuit filter revision as well, that has come in for a Repco Home Finance. So, okay, pardon me, it's not coming for a Repco Home Finance yet, but yeah, there is, some interest coming in these HFCs in general. So there you have it. That's, of course, all the big movers and shakers today in trade. But the other big news maker is also Vedanta, whose delisting process is currently underway. Shareholders have between today and tomorrow to bid in their shares for delisting. In order to be able to go through with the delisting, Vedanta will need 134 crore shares. That's roughly 86% because at this point of time, ADRs do not put in their bids. Depository receipts essentially don't put in their bids. So 134 crores is what they need for this delisting to go through. For now, the number is at 45 odd crore shares. So around 90 odd crores still needed. I think, like I've been mentioning, that institutional participation will be very key because, we have names like an LIC that own about 23 odd crore shares. Largely, the shares seem to be bidden at numbers at 150 rupees and under. Though as we speak, there is this large unconfirmed quantity that has been bid in at the price point of around 153 rupees. 10 crore shares have been bidden over here. Though, mind you, this is yet to be confirmed. This is an unconfirmed bid that has come in. But yeah, like I mentioned, when these big guys come in, when LIC, HDFC with their big quantum of shares do bid in, their price point will be watched out for very closely. So we'll wait till tomorrow. That's the last day of the delisting to see how this process pans out. Okay, well, moving on, we have the retail sale numbers of September that FADA has released. Utkarsh Chaturvedi joins us now. And Utkarsh, largely more, when it comes to September sale numbers, largely the street was very impressed with what the auto companies have delivered, how they've rebounded, especially from COVID months. What does the FADA data have to say?
So two positives, one negative. Actually, two positives, two negative. If I really look at the data, on the first positive will be the fact that passenger vehicles for the first time after lockdown have gone positive Y&Y in retail numbers, almost 9% up. That is a big jump. So we are seeing that at least in the passenger vehicle space, Y numbers are there, retail sales are happening. What is the second positive? Second positive is tractors. 80% retail sales up Y on Y. Now this is a big number, and that is something which has been really impressive. The tractor sales have been doing really well for a very long time now, and now really showing that how good the monsoons have been, and more importantly, the rural economy and how that can grow. Then let's talk about the negatives. The two-wheeler sales, despite being positive when it comes to the wholesale numbers, are 12% down. That means the inventory stocking up happening in the two-wheeler space, in the retail space. Still, there is not that amount of exuberance in the market currently. And that is what is also being said by FADA in its commentary. And what they've said is that the current inventory levels are very high, almost 45 to 60 days for two-wheelers. And if the festive season does not go the way it is planned, then it can wreak havoc. How? Let me try and explain to our viewers, because when a sales happen from the company, from the numbers which you get from SIAM, these are sales numbers which the companies sell to the dealers, and then dealers keep it as a stock, and the companies keep also selling, giving more stocks. If there's no retail of that volume, then the inventory piles up, but the dealer has to pay for this inventory, and that's why he starts dealing with working capital issues. So that is a very important part. What we have to now see is October and November. That will be major months to really see how much of a recovery actually have been made. September, there was a lot of issues when it comes to dates. There was Shraddh in most of the Hindi heartland, so that would have also impacted. So all eyes need to be on October and November. That will really tell us how big and is the recovery in the auto package back.
Right, Utkarsh, thanks so much for that. Well, yeah, the festive season is definitely awaited, and that's also going to move the needle in a significant manner for auto sales. Okay, after that, after news that Calrock Capital has won the bid for Jet Airways, the resolution professional of Jet Airways has told ET Now that the news is untrue. Priyanka Iyer joins us with the details. Priyanka, take us through what the RP is saying. What's the process that's underway right now?
Well, yes, after the news came in last night that Calrock Capital has said that they have become the winning bid for Jet Airways and that their bid has been accepted as a final bid. We spoke to the RP this morning, Mr. Ashish Chaucharia. He has confirmed to ET Now that the news of Calrock Capital winning the bid for Jet Airways is completely untrue. In fact, Mr. Chaucharia has said that the process of voting is still on. The COC is still voting on the 2 resolution applications that they have received, and the process will end only on 16th of October. So until then, we are not likely to see any final decision coming from the COC. The RP had also intimated the stock exchanges on the 3rd of October that 2 resolution applications have come in. The names are not mentioned, but what we are picking up is that the two consortiums that the COC is voting on one is Murli Lal Jalan and Calrock Capital Partners. So that is one consortium, and the other consortium is Imperial Capital Investments, Flight Simulation Technique Center, and Big Charter. So these are the 2 shortlisted bidders at this point in time. No final decision has been taken yet, and news of Calrock Capital being the winning bid is untrue.
All right, thank you, Priyanka, for that. Well, the big news, of course, is with respect to the Future Group stocks. All of them are tanking today, and this on the back of an ET Now exclusive. Amazon has served a legal notice to Future Coupons, the Kishore Biani-led promoter entity of Future Retail. ET Now exclusively learns from sources that Amazon is accusing the Future Group of not meeting its contractual obligations by going ahead with the 25,000 crore rupee deal with Mukesh Ambani's Reliance Retail. Nayantara Rai joins us with the report.
This is an ET Now exclusive where we understand from our sources that Amazon has sent a legal notice to the Future Group, to be precise, Future Coupons, which is a promoter entity led by Kishore Biani of the Future Group. Amazon has a 49% stake in Future Coupons, which it had bought for approximately 1,500 crore rupees. So what is it that we understand Amazon is miffed about, what it has alleged in the legal notice? It has alleged and accused Future Group of being in breach of the contract it had signed with Amazon. We understand from our sources that Amazon has accused Future Group of not seeking a right of first refusal, a contractual right that Amazon got when it bought its 49% stake in Future Coupons. The second part that we understand that has been covered in the legal notice, once again to do with the contractual breach, is Amazon accusing Future Group of breaching a non-compete-like pact that existed in the contract. We've been told by our sources that when Amazon had invested, there had been a restricted list of sorts, a non-compete pact. So it's not anti-reliance or any anti-specific company or anything like that, but the very fact that this non-compete-like pact did not allow Future Group to get into a new deal with a competitor. And so that's something else that has been covered in this legal notice. We are also being told that the various grievance redressal mechanisms is what will be the way forward between the two groups, Future Group and Amazon. And these cover courts, it covers mediation, it also covers arbitration. Of course, we reached out to all the stakeholders. Amazon has still not responded to ET Now's detailed query. Neither has a Future Group, neither has Reliance Industries. Recently, we did see RIL approach the competition watchdog, the CCI, to get its approval for this 25,000 crore rupee deal. But certainly a twist coming in there with Amazon sending a legal notice to Future Group.
All right, Nayantara, thanks a lot for that. That's the Big ET Now exclusive, and it's of course picked up by various media sources as well. Okay, well, let's now also touch base on the macros. We have the RBI policy meeting that's currently underway. The outcome is tomorrow. Let's go across to my colleague Poonam Sani on what to expect. Poonam?
While RBI is likely to keep a status quo on rates but maintain an accommodative stance, RBI may also possibly release the GDP projections for FY21 along with inflation updates. To note that RBI so far has only stated that they expect GDP to contract for FY21. Having said that, the entire rationale for a status quo is the fact that RBI has front-loaded rate cuts. CPI inflation has remained fairly high over the 6% mark for quite a few months now, and inflationary expectations are only likely to recede slightly over the next 6 to 12 months. Having said that, again, economic growth recovery, the challenges do remain there, but high-frequency indicators are signaling some positive signs as of now, and hence the commentary in terms of growth inflation dynamics would be important. Economists do still expect another 25 to 50 bips rate cut coming in from December policy onwards. Commentary from the new MPC members would be important, as a recent Romano report states that new MPC members would tilt the RBI MPC into a slightly more dovish to a neutral policy stance. Besides that, of course, the RBI's commentary in terms of need for fiscal stimulus, options for on the option that they're considering, deficit monetization, and of course the clarity in terms of use of special OMOs and how they will continue to absorb the borrowings would be fairly important.
Welcome back. You're watching the newsroom on ET Now. The Indian real estate sector seems to be making a comeback in the third quarter of the 2020 calendar year, with recovery being seen in both residential as well as commercial markets. This as per Knight Frank, India's latest report. Now, while home sales in the topmost 8 markets in the country rose 2.5 times quarter on quarter because of discounts, schemes, and of course the low home interest rates as well, even office transactions were up a good 80%, owing perhaps to further unlocking in the country. My colleague Neha Tyagi joins in with the details.
Well, that's right. Like you mentioned, the recovery has been seen in both residential as well as commercial markets. Talking specifically about residential markets, home sales are up 2.5 times as compared to Q2, while new launches are up 4.5 times. Residential sales of top 8 cities have reached 54% of pre-COVID levels. This recovery, as you said, has been driven by discounts, lower pricing schemes, as well as low home loan rates. Apart from that, in terms of pricing, the weighted average prices have declined in the range of 3 to 7% for 6 of the 8 top states. Hyderabad and Bengaluru are the only markets that have seen a price increase in the range of 3 to 4%. Apart from that, if you look at office sales, office transactions of prime cities have gone up, have surged 80% quarter on quarter. New office completion has recovered by 126% this quarter. Total office transactions of top 8 cities has reached about 33% of pre-COVID levels. And as far as new completion is concerned, it's reached about 29%. This office market has been driven by Chennai, Kolkata, NCR, and Mumbai. The same sentiment has also been reflected in the numbers that ANAROCK had come out with. According to ANAROCK, Indian housing sector in terms of sales has seen a recovery of 65% in terms of pre-COVID sales. And as far as new launches are concerned, the recovery is about 79%. Apart from that, all the new supply that is coming in the market, 72% of that is from the affordable and mid segment. Apart from that, about 1% decline in unsold inventory has also been seen. So good news coming into the real estate sector. Experts obviously believe that going forward as well, as we unlock further and as we approach the festive season, the pace of recovery will pick up further.
All right, Neha, thank you so much for that. Volatility is an intrinsic nature of the stock market, and every time the indices drop, investors get into a state of panic as they worry about the loss of their hard-earned money. On this edition of Nivesh Ke Funde, our special investor education series, we get you on what to do when the markets fall. Take a look.
Hello and welcome to Nivesh Ke Funde. Well, we all know that equity market never goes up in a straight line. Equity market by nature will be volatile.
So true, Nikunj. It's only when the markets fall drastically does one get worried about one's hard-earned invested money.
So when prices are down, it is important first to stay calm, maintain your financial discipline, and stick to systematic investment plans via mutual funds.
Yes, the fall in the equity markets is a short-term phenomena, and it's very important to stay focused on the long-term goal that you have in your mind.
So Aisha, human mind is programmed to panic. We tend to get in a freeze mode when markets go down and when stock prices are in a free fall. But it is important not to panic, because the haste will really cause you long-term pain and it will affect your wealth creation journey.
It's important to remember the golden rule of investing in the markets. Buy low and sell high.
Well, after all, you're investing in market because investing in equity is nothing else but buying future pricing power. And investing via mutual fund is always the best and the easiest way to buy future purchasing power.
Exactly, Nikunj. Might as well buy more when the markets are low and reap the benefits when the markets rise again.
So next time when markets fall, do not panic. Stick to your financial planning, which is discipline, diversification, and having a long-term view. Well, that's it on Nivesh Ke Funde on the Times News Network.
Okay, well, with that, we'll wrap it up on the show. Many thanks for watching.